Good morning and welcome everyone to the 2017 World Bank and IMF annual meetings. Here's what we're seeing now. After several years of disappointing growth, the global economy has begun to accelerate. Trade's picking up, but investment remains weak. We're concerned that risks such as a rise in protectionism, policy uncertainty, or possible financial market turbulence could derail this fragile recovery. Overall, we're seeing growth rise in most developing and advanced economies, which is why countries need to make critical investments now. Last week, I spoke at Columbia University, and I introduced an accelerated effort we're undertaking at the World Bank Group called the Human Capital Project that will help countries invest more and more effectively in their people. We're hoping that this project can show heads of state and finance ministers how long-term investments in their people can help grow economies. We think this effort has the potential to be a game changer in the same way that our Doing Business report was when it launched 15 years ago. If you look at the top 25% of countries that have improved human capital over the last 25 years, and you compare them to the bottom 25% of countries that have not improved human capital so well over the last 25 years, the difference in economic growth is as high as 1.25% of GDP per year. But in my mind, as you look forward, that connection is going to be even more powerful as the economy becomes more digitized, it requires much more sophistication in a digital economy. I think we're really on a race with time. Because what will happen is if young people are stunted as children, as infants, and then don't get the education they need, they're going to find themselves living in an economy where they just can't compete. And that is going to be, I worry, a source of instability, conflict, violence going forward. So we've got to move on this very quickly. This is why we're so committed.
Great. Thank you all very much.